The information I'm about to present in this video should not be for free on YouTube. The Fibonacci retracement is a super powerful tool that can help traders in identifying market reversals with high accuracy. So in today's video, I will completely explain the Fibonacci retracement tool, and I will give you the best strategy with this tool that will instantly make you a rich profitable trader. At the end of the video, I will tell you in which currency pair and time frame you will get the most profit from the strategy. Let's get into it. And to draw a Fibonacci retracement, you need 2 points, a starting point and an ending point. These points should be the highs and lows of the markets. And as you see, the Fibonacci retracement tool has many levels, and these are the Fibonacci ratios. But you should keep in mind that we're not going to use the Fibonacci ratios in this strategy, because after many years of trading, I found special ratios that can work in the market and make you a rich trader. So watch the video to end to see what are the special ratios. Let's say we have a bearish wave here, and this downtrend wave includes a high and a low. Now select the Fibonacci retracement tool and draw the Fibonacci retracement from high to low. So it means that our first point to draw the Fibonacci retracement in a downward movement is the high of the wave, and the second point would be the low of the wave. So here's the correct way to draw the Fibonacci retracement in a downward wave. Now we have to wait for the price to break out the yellow line. Then after the breakout, we wait for the price to pull back to the blue line. If the price pull back to the blue line, this blue line would be our entry price for a buy trade. And this white line would be our stop loss. So set your stop loss slightly below the white line. And the upper yellow line would be our target for this buy segment. So set your take profit at the yellow line. The risk reward ratio of this trade would be 1 to 2. Now let's draw the next Fibonacci and to learn what are the sell trade rules in the strategy. Suppose here we have an ascending wave which includes a low and a high, and we will use these 2 points to draw the Fibonacci retracement. Now click on the Fibonacci retracement tool and draw the Fibonacci retracement from low to high. Low becomes the first point and high becomes the second point. Now we have to wait for the price to break out the nearest yellow line. After the breaking of this yellow line, now we should wait for the price to pull back to the blue line. The pullback to this blue line means entering a sell trade at this price. After that, we will use the white line as the stop loss of the sell trade, and we will place our stop loss a little above this line. And the lowest yellow line will be the target of this sell trade. Now let's test this strategy together in the real market. There's a bearish wave here. We will use the high and low of this wave, draw the Fibonacci from high to low. Now we have to wait for the conditions to enter a buy trade. That is, we should wait for the breakout of the lower yellow line, which happened here. And after that, the price has pulled back to the blue line, which has created the conditions to enter a buy trade at this price. Therefore, we open a buy trade at this price and place the stop loss below the white line and place the target above the yellow line. And here the price touched the target with the risk reward ratio of 1 to 2. Let's see the next example together. There's an uptrend, and we draw the Fibonacci from low to high of this trade. Then we wait for the conditions to enter a sell trade. The price has break out the upper yellow line, and then there's a pullback to the blue line. So now we can enter a sell trade at this price. and we will place the stop loss above the upper white line, and we will use the lower yellow line as the target for this trade. In order to better understand how to use this strategy, let's see more examples in different time frames. Okay, now it's time to set the special ratios. So double click on the Fibonacci retracement tool and get into the settings. Then head over to the style section. Set the levels to percents and get rid of prices and background. Then it's time to change the levels value. Get rid of these levels. And now set the first level to 0%. The second one to 0.2 for 20%. The next one to 0.33 for 33%, and the next one to 0.66 for 66%. The next one should be set at 0.8, which will represent the 80%, and the last one should be set at 1 to represent the 100%. And then change the color 0 and 100% to white. Now it's time to change the color of 20% and 80% to blue. Then the color 33 and 66% should be changed to yellow. And at the end, enable the extended lines right. Now we're done with the Fibonacci retracement settings, and these are our special settings for this strategy. The strategy is based on the idea that if the price has the ability to move in the opposite direction by 1/3 or 33% of its previous move, then it has enough movement to move another third or up to 66% of the previous wave. If you want to trade with this method, I recommend you to definitely use this special strategy in gold and a 15-minute time frame. But if you want to learn an even more profitable strategy, I recommend you to watch this video as the next video.